Hey, it's Stephen here again on the YouTube channel. Just like I do with every other video, folks, instead of me trying to sit here and introduce everybody and saying what they do and how they do it, I always just let my guests introduce themselves and tell us a little bit about what they do, just because they're going to always do a better job than me. So maybe Danielle, you want to go first, and then we can kind of proceed however you like.
Okay. Yeah. Thanks, Stephen. So my name is Danielle Clark, and this is my business partner, Evelyn Gomez. So we work as a team. We work for WFG, which stands for World Financial Group. We are actually a group of individuals that strive to teach financial education. Our company has been around for over 100 years, and we just strictly focus on teaching families how money actually works. One of the ways that we try to help people is through our 7 money milestones, which is what I'll get into in a second. But we just want you to know that we are a little bit different from other financial industries. Financial industries usually target people who are affluent, meaning that they have a lot of money. We are totally different. We are a non-captive based company. So we actually work with 200 different insurance and financial companies. That way, we can offer many products to our customers instead of just the products that one certain company provides. And those companies actually pay us out of their marketing funds. So therefore, we are able to meet with our clients and provide services free of charge, which is great because that way we can help anybody from all walks of life, meaning we can help the lower class or the higher class. It doesn't matter where you are from or what your background is, we are here to help. So, like I said, we take an educational approach. And since we aren't paid for our services, the only thing that we ask is for 5 names that we can talk to, 5 referrals, if you'd like to say it that way. That way, we can continue our business and helping people with their finances through word of mouth instead of through cold calling or door knocking. The 7 money milestones are, I will cover the first three just briefly. The first one is financial education. So, 3 ways that we do this is one, we get people sitting down face to face with a financial advisor. A second way that we do this is we have a free How Money Works seminar. It's free to the public. So, no, there's no charge. You just come, and our CEO actually will tell you like basics that people should know that we weren't taught in school. Another way is that once you leave this How Money Works seminar, we actually give you a free How Money Works book, and it's very easy and kid friendly too. Some people are like, "Oh, a book, I don't want to read that." But this book is actually like comic-y and it's fun. The second milestone that we focus on is cash flow. We help people create a budget. We help them find dollars that may be falling through the cracks that could be put to better use. After that, we help with proper protection. This is life insurance because death doesn't wait until it's convenient, right? We wanted to show people the different types that there are out there. We want them to know how much they should have, and we want them to pay a good price for it. Any questions so far?
Well, I guess I have a comment. I mean, with the financial education, one of the things that makes it so tricky on my end, of course, like, I mean, obviously I do the real estate thing,
Mhm.
we do a lot of different things with it, is so many people really do not want to talk about money up front with buying a house. But, it's obviously the biggest financial decision you're probably going to make for
Mm.
many years to come, other than retirement planning. I think that's a bigger financial decision personally. Some people disagree. And of course, like, I'm a realtor saying that. Some people might be shocked I would say that out loud, but I have been surprised how just the general public has a big lack of, I would say, respect for trying to be educated on their own finances. I mean, even just with a personal budget. You can probably keep talking about your 7 milestones, but it's probably more of a comment than a question. And I think just you don't have to be some big financial wizard. Just financial education is even just knowing what your own personal money is doing on a weekly basis.
Yeah, true. Yeah, we like to point out some things that they could be, spending their money elsewhere to save up for those kind of things like a house, right? And people really don't take that into factor until you point it out to them. But yeah, learning about money is very important regardless of what topic it is, especially when you're trying to buy a house. But she went over the first 3 milestones. financial education, cash flow, and insurance. We do a lot more than that. Our fourth milestone is an emergency fund. So we would like to tell people not to save at the bank because you don't get a lot of interest at the bank. It'll take you 720 years for your money to double in the bank. So we feel like if you're saving for something big, you might want to make it grow faster. Therefore, we offer various accounts that are a lot bigger or a lot better than the bank with better interest, and we also teach you how to save 10% of your income so that way you can actually start having an emergency fund. Therefore, you can prepare for 3 to 6 months of expenses if that needs to be done. Or if you're a homeowner, you would have an expense, right? You would need to replace the water heater if needs be. So that's our next step. The fifth step is debt management. So a lot of people like to go out and get a ton of credit cards, and that's like the American dream, right? Just get into debt. But we like to tell people that that's not the American dream. The American dream is to be debt free. Financial independence is pretty much your Independence Day. It's not the 4th of July. It's the day that the last day that you owe someone money, right? So on this step, we teach people how to use their credit cards wisely, get them down to at least one good credit card that really benefits them, and also teach them debt strategies that will dissolve their debt quicker. Because a lot of people don't know what debt to struggle or to dissolve first. And that way we can help them with making that kind of decision. So those first 5 steps are basic financial stability. The last two is financial independence, meaning that you won't have to ask your money for permission anymore. We think they're the funnest steps of them all. The sixth step is building your wealth. So a lot of people have taxable and tax deferred accounts, but they don't know about the tax advantage accounts just because they haven't been properly educated. So we teach them about all 3 taxable buckets and how to average them all out to retire on a 0% tax bracket. And in the end, we don't want to give our retirement funds to Uncle Sam, right? We want them for us. So that way, if we can actually get to that point where we're zeroed out when we retire, we can have that luxury of not owing anybody money or paying a ton of taxes when we retire. The seventh step is protecting your wealth. And this is the very last step because we see this all the time. Technology is very advanced these days, and we can have people living till they're 100 and whatnot now. Uh, People don't put that into their plan when they're planning for retirement. They say, oh, I'm going to retire at 65. I'm only going to live about 20 years. But you could actually live a lot longer than that. And what happens is they prepare for that 20 years, but they live longer. And so they run out of money and they end up having to go back into the workforce. And sometimes that's not even an option at that age. So on this step, we make sure that the money that you save will be put into good hands. And that way you can create your own personal pension. This will be an account that'll pay you until you die, no matter how much money you've taken.
It's funny when we first spoke, I talked about, you have like the 7 milestones. I know years ago I'd done the Dave Ramsey stuff, right? There's kind of baby steps, and you and I had spoken separately from this video about just kind of some differences that you and I had with him and his program, and some opinions I had. It's like, I mean, I have a credit card,
Yeah.
and having credit is just it is a necessity. However, I also will argue that too many people in this country carry way too much debt. There's so many people that want to have 2 or 3 cars. They want to finance furniture. They want to have more than one credit card
Mm.
and house payment. I've seen people who, again, just make very poor financial decisions just in their day-to-day life. For people to kind of get to that stage of retirement, it requires not just knowing those 7 milestones, but it does require real daily habits.
Mhm.
I mean, what are the things that people are not doing that are preventing them from being able to retire with money or preventing them from buying that house? Like, for me, what I see is just they don't have a budget, or they just have way too much debt, and they have excuses like, "Well, I had to go get this degree, or I had to go do that," and then they pay the bare minimum, and just
Yeah.
I see those sorts of things. But I'm curious, what are you seeing on a day-to-day basis, and what's your advice to get away from maybe, I guess, those negative things? Hopefully that question makes sense. It's a little
Yeah.
word, but hopefully it makes sense.
Yeah. So honestly, what we see the most, you hit it straight on, honestly, is the budget. So we do create that budget in the cash flow step. And what we see the most is like people will follow it for a very short period of time and then they get unhinged again and they go back to their spending habits. And therefore that money that we had put in their plan, so like this is how much we need to save to get to this goal. When we come back to it and review it, we show that they haven't been saving exactly what they needed to reach this goal. So in the long run, over time, if people don't follow a plan and they fall off, it actually takes a lot longer to get to their goal, right? And the goal is retirement with a certain amount of money. So what we see is that, okay, this account isn't working anymore. We're gonna have to go on more aggressive. And people don't like the more aggressive side because there's more risk involved, right? When you want more profit, you gotta take on more risk. And so we have to move that money to other places to make it work. Another thing that we see is the emergency fund. Another reason why people can't, like, buy a house is because they don't stay away from touching their emergency fund or their savings account. What we see all the time is, they needed to get that TV or they needed to get that hair or nail appointment done. It's just take getting, I don't know, your personal things in a mix. Your emotions take over you and you just decide that you need this when it's actually a want instead of a need. And do you have anything to add to this?
Yeah, I would say like there's no urgency in people. I actually meet with a lot of younger people, and it would make sense to take advantage of planning for retirement now. But, obviously we're not taught these type of things growing up, and we're not thinking about it. People who are 20 are like, you know what, I want to have fun. Like, I'm only 20. I don't have to think about that for another 10, 20 years. And then, they turn 40 and they're like, you know what, I wanna plan for retirement now. And then they come to the really bad, realization that they're gonna have to start saving thousands to reach the goal that they have for retirement. And they're like, "Well, I can't do that." And they were like, "Where were you like 20 years ago?" But they weren't really willing to do that at the time. So I
Mhm.
do think it kind of depends on the person. They don't see that it's very urgent to start now when they have time.
Yeah, you can
What
make your money work way better for you if you start young.
Yeah, so I mean, it's just that, you said urgency. I mean, just having the daily habits. I mean, having that internal motivation. I mean, what are some common misconceptions people have with their personal budget with debt or retirement planning that you guys come across and maybe you want to myth bust?
Ha The fact that they don't have enough money. That's what we hear every day, all the time. "I don't have enough money to save. I don't have enough money to save. I can't even reach that goal even if I try." It's not about how much money you make. It's about what you do with it. It really is, because you don't realize what you're spending when you could on things that don't matter to you in the future. Those coffees, those subscriptions, going out to eat, people just really can't restrict themselves from those things. And yeah, that's the main excuse is I don't have enough money. You do. You can save $15 a month for the rest of your life and become a millionaire. It's only that $15, right? You have to start now and you have to save a little bit. Even if it's just a little bit.
We usually do advise people to try and save 10% of their check. So if they're making $1,000, then we say save 100. And to them, that might be like a stretch. Like, you know what? That's so much. I can't do it. But, you know, they could if they really did cut out the lattes or the subscriptions or whatever is just a want and not a need. Even if it's not $100, if it's like how she's saying, $15, $20, we would still advise to put that aside, let it accumulate and do its thing. And an account earning really good interest. I think it is more of a mental thing with people. Like they really do think they don't have anything. But if we sat down with them and said, all right, what did you spend this check on, these last 2 weeks, we would see like
There's
what they're really spending on.
Another thing is saving first. Everybody's always so worried about paying all the bills first and then having their expenditures. What we suggest is putting the savings away before then paying your bills, and then whatever you have left over after that is your money. It makes it a little bit harder to go out and spend extra money if you have it in savings first. And another thing with the savings account, if it's touchable, like, you can go to the ATM and pull it out immediately. People are more likely to touch that money. When it comes to the savings account, we want it to be a little less accessible. 24 hours to really think about something. If it's an emergency, right, you can just I would say it's not emergencies are not supposed to be put on credit cards unless you can afford them. The emergency could be paid on a credit card and paid back with your emergency fund if it was an emergency, but the savings account, it needs to be a little less liquid than the bank. And that's another myth. They're like, "Oh, the only place to put it is in the bank." And that's just because they don't know of other places to put it.
Yeah. Where are some of those other places you would say to put the emergency fund?
Our favorite one is Betterment. And people love it because it's actually an app on your phone that you can control by yourself, and you can allocate money to be taken out just automatically, or you can stop it and do it by yourself manually. It also has a lot of options to create certain accounts for certain things. And say you wanted to save for your dog or like to buy a house, you can allocate money to go in there. And then there's also a general investing account that you can do a little bit of investing in. And if you're one of those investors that like to have control of your investments, you have complete control on that on Betterment to if you want to invest more in stocks or more in bonds or the certain types, whether it's tech or, commodities, whatever you wanted to invest in, it's at your discretion, right? And the savings account that is on Betterment is actually a 4.75%, so it's way better than the bank.
I think one of the things I also see is, and I'm curious, to me, this seems like a myth, and I don't know if you'll agree with me. A lot of people seem to think, in terms of retirement and even with homes, that like the government's going to come in and save them. The government's going to give me a free house, or the government's going to put me into a retirement home, or it's going to pay for my retirement. Medicare is going to do all this stuff for me. Like, there's a lot of people who think
Mhm.
that sort of stuff. And the reality is, like, no,
They're not.
the government is not going to save you. And they just don't understand it. It's like,
Mhm.
yeah, I know you paid into Social Security, but that Social Security payment will not be enough. Reality is, who knows if it'll even exist when you and I are at that age. But regardless of that, currently, it's not enough for people. I mean,
Mhm.
let's just look at today. It's not enough for people to survive on.
No.
And when you look at Medicare, Medicare does not pay for assisted living. It does not pay for Medicare, for private. Well, it doesn't pay for those private communities. There are some Medicare, Medicaid communities. They are very few and far between, and they do not provide really the level of care those people need. It's income restricted. There's all kinds of issues there. But you are not going to just get free medical just because you're on Medicare, and you're not going to just live in a retirement community because you're old.
Mhm.
I see again where a lot of people think, "Oh, I'm a first time home buyer." And they think, "Oh, well, I'm a first time home buyer. I can do a 0% down loan and I'll just get the house." Well, it's
We were
kind of like,
just talking about this.
well, it's like 0% down. Well, okay, you still have to pay all the money then, or someone else paid the down payment. It's like, for example, Utah Housing with FHA. They pay the down payment and it's added as a secondary lien, a second mortgage to your house. You're still paying it somehow. It doesn't just magically go away.
Mhm.
So you would have been better off to have saved up something to put down. I tell so many first time buyers, like, if you save $10,000, even in our current housing market, you opened up a huge window of opportunity to buy a house. Of course, they laugh and they think, "Oh, no, it's not." Yeah, yeah. Now, you're not going to get a $700,000 new home that was built, but you can definitely get a starter home.
Mhm.
Those are my kind of myth busters. I don't know if you come across that or
Oh,
share
yeah.
the opinion or not.
All the time do we get people that say, "Oh, yeah, I'm just gonna plan on Social Security." And it's actually becoming social insecurity. Yeah, it's not likely. When I do my client analysis, we don't even put Social Security as a factor anymore. Like, if it happens, it's extra, but our financial responsibility is put on if we wanna live comfortably in the future. And then with the retirement homes, yeah, even if you do have Social Security and you end up needing to be in a home, they will take all of your Social Security and give you $45 out of it to spend if you're in one of those homes. And, like, I don't know anybody who would wanna live like that. They don't pay for anybody to come to your home to take care of you, and nor would it pay for someone to come do that on top of your house if it's not paid off, right? So, yeah, there's a lot of misunderstanding when it comes to retirement. they're not going to have enough money to live the way that they want. And most people who don't plan have to either go live with their children, and their children don't really want that responsibility either. They kind of wanted to start their own lives. But yeah, and then with the housing, that's crazy because we literally I experienced this. I have 2 houses. They're over 100 years old, and all we have left is 50 grand on these houses, but since we make too much money, we don't qualify for the first time home buyers loan, and so the closing costs are way, way higher now, and unfortunately, people always think that they will be able to qualify for those loans if they make less, which doesn't make sense to me because why would banks wanna give money to people who make less, who are less likely to, pay that back? But that's how it works. But most people don't even think about it. They're like, "Oh, I'm just gonna have that first time home buyers option," right? I don't need to save anything. But luckily, when I work with my clients to get ready to buy a house, I'm like, "We need to save at least 3 to 9% of what this house costs," right? Would that be correct?
Oh, I mean, yeah, more than that because like FHA, you have to have 3.5% to put down, but your
Yeah.
closing costs are around 3%. And
Mm,
then, I mean, you're going to want to do a home inspection, and your home inspections are going to range anywhere from 300 to $1,000. Reality is, you're also going to have things like moving costs.
mhm.
I have to bring money to the table for negotiated transfer fees on an HOA or any sort of assessments or any sort of taxes. Like sometimes there's just things that come out in the math. Additionally, there could have been a problem in the appraisal. Let's say the home didn't appraise and you really want that home and the seller's not willing to just drop the price. You might just end up paying that extra cash just out of
Mm,
your. Now, most first time home buyers are just going to walk away. And you're protecting a contract that way. But typically, yeah, I mean, you're looking at close to 10% when it's all said and done. And people don't think again about, if it's an HOA and then turning on the lights and water, other utilities. And,
yeah,
again,
sure.
like when you move in, you're going to have the first mortgage payment in 30 to 60 days. It's just, yeah, it is not just free. But at the same time, it's not $100,000 like some people think either.
Yeah.
Again, if you have $10,000, like your options are really open.
Yeah, I agree. And they see it as like, "Oh, I'll never be able to buy a home." And we're like, "Yes, you
Yeah.
will be able to. You just have to work really hard on this and be really diligent on saving your money and making it work for you."
We actually recently just met with a couple who they're really eager to get into a home, and we were saying that they could make it in with about 10% of whatever the full home was worth, and they actually have more than that. But then they were like, like, what if it's not what we want? Of course, homes are worth a little more now, and we don't. Well, I don't know if you obviously you know more than we do.
They would need to talk to the loan officer. I mean, and right now in the market, I mean, I have some people under contract right now where the seller's paying $11,000 for their closing cost. I
Mm,
mean, a lot of that's happening right now because of the
yeah,
market. So that's happening for a lot of buyers. So that can be negotiated. They are doing a Utah housing, so their down payment is going to be put on as a secondary mortgage, but they are aware of that. But technically, they would have, if they were just doing a normal FHA loan, it would have been just a 3.5% down, which would have, the 10,000 would have gotten them in just fine.
yeah. See, and that's why we love working with businesses, such as realtors and whatnot, so we can help our clients find the best option. There may be more realtors that know more a little bit about, the loopholes or the fees that we can be waived or exactly how much it's gonna cost or just some other options they have. And therefore, which is cool because we can get them prepared on our end and then send to them also to the people we trust, which is good. So, I'm glad we're working together on this.
Yeah, I think the thing that I tell people, and it's really hard right now, is you don't have to have like a big expensive house to start off. I mean, the reality is like a one bed or two bed, one bath condo could be the perfect starter home. There's a lot of them in the low 200s right now along the Wasatch Front. Some people still argue like that's too expensive. Well, I mean, it's just the way it is right now. I mean, everything's expensive.
Yeah.
And there's not going to be a market crash unless we're in World War III. And even then, Utah has a strong economy, which is awesome. I'm glad our state has a strong economy. You should be too. You don't want a housing crash. If there's a housing crash here, you're going to lose your job. You're going to lose all kinds of things. People
Mm.
keep saying that. It's not a good thing. But for people who haven't made that decision and who are still renting, yeah, start off with the condo, live in it for a few years, then sell it and move into either the townhouse or single family small home.
Yeah,
But
take
get
some
on
steps.
but yeah, but you've got to start taking these steps. Start saving money like you guys are talking about. Have the financial education, pay down your debt, put in money for your savings for your retirement. Start saving more money for the next house. And I would say, it sounds like, and maybe you can both elaborate on this, that a lot of people, when they look at these 7 steps, they think they can do it in like a few months, but this is a lifestyle. This isn't just something you do for a few weeks and you're a millionaire. It's no, this is a lifestyle choice. Would you say that's accurate?
Yes, and that's why we are continuously there to help and do annual checkups to see where you're at, and we get to work with you for the rest of your life if needs be, which is great.
As you get closer to retirement, we actually suggest needing more because you're getting to that, not the end of the line, right? But the end of the line for working.
Yeah.
So we
Well,
want
your money management becomes more crucial because you're not working and you're living off of those savings and those accounts. We do got to wrap up here. Tell us real quick how best to contact you and find you online.
Yeah, so if you wanna get in contact with me directly, it's danielle.clark@tfaconnect.com. My personal phone, I always take personal phone calls. It's 385-352-5382. And Evelyn,
I'm gonna go with my number 'cause that's the best way to reach me. 801-500-3477.
Awesome. Awesome. And where's your office located? Can you tell us one more time?
yeah, so it's right off of 106 South in the freeway, 10653 South Riverfront Parkway. It's, Managed Wealth Financial.
Okay. Okay. Very good. Well, hey, thanks so much for jumping on the call. Of course, we'll be posting this and it'll be here forever. And folks, if you have any questions for both of them and have any comments, want to like, share, and subscribe, please do. Thanks for being here and we'll see you next time. Adios. See ya. Bye.
Thanks, Steven.